Hey everyone, Meta Platforms reported fiscal 2023 first quarter earnings results that pleased the market significantly. The stock was up double digits on the day after the earnings release came out. So in this video, I'm going to review Meta Platforms earnings and answer if investors should take profits in Meta Platforms stock. Meta Platforms stock is up 98.6% so far in 2023. Of course, Meta Platforms was one of the stocks I recommended in my list of top 23 stocks to buy in 2023. So if you're following my channel in January and you watched that video and you bought Meta Platforms stock and you made good money on it, you're welcome. This stock has a long way to go, but before we answer that, let's go ahead and review the earnings from Meta Platforms in the first quarter. Revenue of 26.64 billion was up 3% year over year. This was the first quarter in about 4 quarters where Meta Platforms reported year over year revenue growth. Several quarters in a row, the company had been experiencing a decline in revenue as a result primarily of privacy policy changes that Apple had instituted, which made it harder for Meta Platforms to sell targeted advertising. Marketers prefer to sell targeted advertising because it's more efficient, it's more effective. If you know your customer, you can more effectively advertise to that customer, right? Imagine you have a vegetarian that lives in Miami, Florida. You wouldn't want to show that individual an advertisement for a steak restaurant in Los Angeles, California, right? That would be a waste. There's almost zero chance that vegetarian in Miami, Florida would visit this steak restaurant in Los Angeles, California. For that reason, targeted advertising is significantly more effective and advertisers really like it. The fact that Apple changed its privacy policies, making it harder for Meta Platforms to collect data on its users, made it harder to sell that kind of targeted advertising because Meta Platforms now cannot know as much about that user as it did before these changes. So for several quarters, that was a headwind to Meta Platforms, but it looks like now it's lapping those headwinds and it's recovering higher, right? So it brought its revenue down, but that's a one-time decrease. From that point, Meta can return to growth as it finds workarounds and finds other ways to collect data from users. Earnings per share of $2.20 was down 19% from last year. So while revenue was falling, Meta Platforms spending continued to rise, and that created this decrease in earnings per share. However, you will have probably heard in the media that Meta Platforms had announced several rounds of layoffs to save costs, and those should start bringing positive impacts to its profitability. If you look at cash flow from operations, that barely fell. It decreased to 14 billion, down from 14.1 billion. Meta Platform has a lot of non-cash expenses like depreciation and stock-based compensation that account for a meaningful portion of its earnings. So those were when it hires individuals and it pays individuals, a lot of those payments are in the form of stock-based compensation. Daily active users across its family of apps increased to 3.02 billion. That's up 5% from the year before. The fact that Meta is still adding new users to its family of apps despite, having nearly 3 billion already is impressive, right? 5% for Meta Platforms is roughly 150 million, daily active users that it added year over year. There are entire social media companies that don't have 150 million daily active users, while Meta Platforms added that many in one single year. The number of ad impressions increased by 26% year over year, but the price per ad fell by 17%. Now, I want to get more data into the number of ad impressions. Did the number of ad impressions increase because people are spending more time on Facebook? Or did the number of ad impressions increase simply because Meta decided to add more, increase the number of ads you see in every moment in every minute you're browsing one of its platforms? So that's an interesting distinction. I will learn as I dig through the company's earnings statement and more data comes out from this earnings call. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. The total headcount was 77,114 as of March 31st. This was finally down 1% year over year after years of out of control hiring. Finally, Meta Platforms has controlled hiring. It actually started laying people off and considerably slowed down the hires of new people. I'm happy to see that, and this was one of the reasons why I was so bullish on Meta Platform stock to begin with, because I knew there was a lot of room for cost cuts. There was a lot of room for efficiency improvements because the company had been hiring uncontrollably for the longest time, and Meta Platforms is known to pay good salaries. So these aren't people that are making minimum wage. These are people on average making six figures and above. So controlling that, bringing that down has played a nice role in the company's performance and will continue to help bring earnings per share higher going forward. The company's forecasting second quarter revenue in the range of 29.5 to 32 billion. That would be an increase from the 28.8 billion in revenue that it reported in the second quarter of 2022. So even in the lower end of that revenue target, it would still be an improvement from last year. So that will be the second consecutive quarter of revenue growth after several in a row of decreases. That's good news, right? Investors are finally are finally eased of their concerns that Meta Platforms will divert into a decreasing growth stock. Instead of increasing revenue, it will decrease revenue over time. Well, those fears have been eased now that Meta reported revenue growth in this quarter and it's forecasting revenue growth in the next quarter. And then finally, the company updated 2023 total expenses, the total expense target, to a range of 86 to 90 billion. That was down from the previous estimate of 89 to 95 billion. So if we just look at the midpoints of those estimates, the company's going to spend $4 billion less than it initially planned to spend in 2023. That's huge, right? That's Meta Platforms management taking the cue from the market, which was not happy with all of the expenses that Meta Platforms was undertaking, and saying, okay, investors, we understand that now is not the time to invest in these long run targets, or maybe we will invest in these long run targets, but we won't do so as aggressively. We'll pull back some of that spending, and the market has been happy with that. The market has been happy that Facebook's Meta Platforms management is willing to listen to investors and moderate its growth investments. So all in all, a really good quarter for Meta Platforms, and the stock price increase following the report is totally justified because the company is making good steps recovering from the headwinds that were impacting it that brought its stock down so much in 2022. So like I mentioned earlier in the video, if you had been with me from the beginning of this year and you had bought Meta stock early in 2023 and you're now sitting on gains of 98% for the year, I think it's time to trim, take some of the profits, sell some of the shares that you got in the beginning of the year, because 98% increase is a lot for 1 year. That's tremendous amount of increase in 1 year. You can't reasonably expect that with any stock. And when I recommended the stock at the beginning of the year, I was not expecting a 98% increase. And that's way above what I was expecting. So to get that amount already, and it's only, you know, May, late April, I think it's great. I think you take profits and you wait a little bit before coming back into Meta Platforms stock. Now, of course, this is going to depend on your tax situation as well. You may not want to take the capital gains if you don't have the offsetting capital losses. I'll leave that up to you. But as far as just stock specific, just looking at, once this is up this much, I would be taking profits here. Okay, so that's all I've got for this video. Hopefully you had bought Meta Platform stock early in the year when I recommended it, and hopefully I helped you make some money. And if this is the kind of information you're looking for, please go ahead and subscribe. I make a lot of videos like this one. I make a lot of stock recommendations, and I would appreciate to have you on as a subscriber. And if you want the list of my top 20 stocks to buy in 2023, that video is popping up on your screen right now. So click on that. I think it's over there, and I'll see you over there. Thank you so much for watching.